Hello, Sage Seeds. My idea for this video is a very traditional tier list with a very untraditional premise. Since I am an active value investor, I have looked back at my notes from the end of 2023, 1 year ago, in order to distill 12 stock market narratives that at the end of 2023 were probably the most important or talked about to celebrate the end of 2024 and the start of a new year. I want us to, in this tier list, rank the narratives from last year according to how successful you probably would have been as a value investor looking for alpha with that mind frame, with that mindset going into 2024. So for example, this very first one, trading 2024 elections. If you had traded 2024 elections, that was your premise, your hypothesis for the whole year, how successful would the typical value investor have been in being able to generate excess returns? I think I could also, in the next couple of weeks, make a 2025 prediction video, similar format, but that time looking ahead and trying to make predictions for the year we're going into. So if you want to see that second video, or if you like this video, please subscribe to check out our 10K walkthrough videos as they come out to stay well informed on the latest business news directly from the annual reports. I appreciate every bit of support. Okay, 12 stock market narratives, trading 2024 elections. Now, a year ago, everybody knew that 2024 was going to have more overlapping elections globally than pretty much any year in the next 50 years or something. There was just non-stop elections going on in every country around the world pretty much the whole year. It was crazy. And so what this is talking about in my mind, people were emphasizing that historically elections tend to trade with uncertainty, then the uncertainty gets removed. Therefore, stocks tend to trend immediately after an election. It's the removing of the uncertainty on the day of the election that makes it so that it's a pretty safe bet to expect a trend. That hypothesis, that theory about how elections behave in stock markets was pretty spot on. The US markets immediately went into a big bull run right after the US presidential election. People called it the Trump rally now for the last several months, and it's still going on in some markets. That makes me want to say that it's either an A or an S. However, I can see an argument for actually knocking this down to a B, which is that overall, the vast quantity of elections meant that it was really difficult to stay focused on election trading this year. If you considered election results as part of your circle of competence, and this year must have sucked because there was elections going on almost every week. I think the average value investor would have been very tempted to participate in elections that they probably had no business participating in at all. Not to mention, this was the first year that the big brokerages started gambling on elections. I don't think they call it gambling, but you could basically go to your Interactive Brokers, your Robinhood or whatever, and actually bet directly on election results. All of that makes me want to knock this down because the average investor would have very likely been tempted at minimum, maybe even fully sucked in to do some of that riskier behavior, specifically because it was such big business in 2024. So on an average election cycle year, this would have been an A, but in 2024, with all the craziness, an election every week pretty much, I'm actually going to say this goes into B. And this was just a more complex year than it probably ever will be in our lifetimes. I can't not knock it down a tier for that. Okay, next up, the crypto bull runs, of course. 2024 seemed to have been a massive year for Bitcoin, but at the same time, and this is where I think the tier ranking gets interesting, many cryptocurrencies had terrible years. It really was centered and focused just on Bitcoin this year. Then we got to remember, this is a value investment channel. Sage Seeds AI, which is the tool that I use to invest day to day, well, it's a value investment AI. It actually refuses categorically to value cryptocurrencies because I'm using the assumption that you need to have future cash flows in order to start with some sort of valuation. Now, I'm not the strictest on that, but I tend to stay away from all sorts of commodity-like things for that reason. Cryptocurrency to me doesn't even quite qualify as a commodity, if I'm being honest. Not yet, at least. I know it's biased and perhaps unfair if you're into cryptocurrencies, but for me, it's actually a big deal that there's no physical receipt. There's nothing tangible about cryptocurrencies. And so all of those things make me want to put this on the lower tiers. I'm thinking about it like clearly there's other people, there's a whole market out there that is valuing this higher and higher and higher. I don't have to agree with them, but I'm also not going to categorically ignore them. It's a C tier. Okay, next, healthcare stocks. Let's start picking up the pace here, but going on gut feeling, I would think this would be a very kind of middle of the road B or A. But luckily the Sage Seeds AI, when I'm looking at it, I actually look at the sectors quite often, almost daily. And I can tell you this whole last year, some of the most overvalued, some of the worst return companies, according to the AI's models, have consistently been in the healthcare sector. Some research I have done on my own in the last couple of months does make me feel a little convinced that in most developed markets, I'm talking the US for sure, but also Europe and parts of East Asia, well, the COVID-19 pandemic led to a lot of fundraising in healthcare related startups. I think a lot of those companies probably shouldn't have gotten funded, or certainly shouldn't have gotten funded with as much money as they did. I think they did take advantage of the pandemic in a sense, in order to raise funding more easily. And so my personal take, informed by the Sage Seeds AI, is that healthcare is not great value. It's some low B, maybe even C. I'm actually going to put it in C, but above crypto. But yeah, I feel good about that. C tier for healthcare stocks, until a lot of these newer companies, these startups, kind of clear out with whatever happens. Investing in healthcare in general strikes me as a little bit below average. And I'm pretty sure the performance in 2024 would have reflected that. I'm pretty sure it did. Next, we've got the value versus growth factors. Now, this is sometimes called traditional factor investing. It's not, there's all sorts of factor investing out there now, but this is kind of the OG factors, value and growth. And so how did an OG factor investor do in 2024? Well, there was a period of time, July to about November, late October-ish, where value was bull rushing forward. But then the rest of the year, pretty much, growth was heavily outperforming. Now, for those that aren't aware, growth has been absolutely wrecking value for years, since before the pandemic, or slightly before the pandemic, certainly. There's a couple of periods out there, but if you really zoom out, it's been a bad time for value for a long time. And so the people who benefited from having this mentality in 2024 were the growth guys. I do think they've benefited quite a lot, enough to put it into A tier. But if you were relying on just this, you were very confused for about 4 months this year, where value kind of did a little dance, was kind of had the spotlight on value for a couple of months. That means it can't be S tier. This was a painful 4 months. So value investors using value versus growth tend to do well, I think. But yeah, I think it's tough to get into the S tier if you're insisting that things have to be so black and white. It's either value or either it's growth. A lot of the greats say that they don't like this distinction, but it's going to stick around because it's the OG. It's worked better than most things for decades. I think it deserves an A tier. Okay, continuing, we have Japan returns. Now, most of this so far has been about stocks, with the exception of crypto. Japan, I think, is stocks combined with its bonds. At the end of 2023, absolutely, most of my notes actually were about the Japanese bond yields rising for the first time in literally decades. I mean, that was a huge deal at the end of 2023. It continued into 2024 and has essentially been the real trend. It's not really stopped trending per se. So as a value investor with the mindset of how do I benefit from this changing Japanese economy, a Japanese economy that now has return on cash for the first time in more than a generation, I actually think you would have done quite well. You could have kept it simple, shorted the Japanese yen. A step above that, I know the Japanese carry trade was so big that it actually led to a kind of crazy crash, a little flash crash type thing in around August, I think it was. You could think, oh, the flash crash was bad, but the flash crash only happened because the Japanese carry trade had been so solid every single day up to that point. You were basically printing money if you had a Japanese carry trade before and after the flash crash, if I'm being honest. And so in terms of just a starting mentality, looking at Japanese markets was great. Some of the big name investors, I mean, famously Warren Buffett was heavily investing in Japan while pretty much not investing anywhere else, as far as I'm aware, like very selectively investing everywhere else. But he was having a field day in Japan. And so were several other of the big value investors this last year. So yeah, that's an S tier for sure. Small caps. Now, when I read this, I'm considering the small cap versus large cap strategy. So, if you thought small caps were bad and you decided to buy only large caps, this is what this is talking about as well. But the mentality of small cap versus large cap, I think this is such an evolving thing. You used to just have small, medium, large caps. Now you have micro caps and you have ginormous caps. As the years go by, there seems to be just even more difference between the smallest companies and the largest companies. So this is getting messy. This is getting messy for sure. Messy enough to prohibit it in the S tier. I don't think it can be in the S tier. But is it A? Or am I going to go down to B is the question in my mind. So unequivocally, from what I've been seeing, if you invested in just large caps, you had a great 2024. Small caps have had small bursts during 2024, but overall, large caps have been clearly trending above the performance of small caps. The small cap premium is dead and decreasing in negative. So it's a growing negative premium. If you were focused on small caps versus large caps, I think it was pretty straightforward for you to realize that was going on. At the same time, I'm looking at the Sage Seeds AI every day, and there's not a lot of difference between the undervalued large caps and the undervalued small caps. Now, if you're looking at the ginormous, like if you're looking at companies north of 500 billion, north of 200 billion even, yeah, most of those companies are not undervalued. That's, you can't avoid. Like those companies are so huge, there's too many people looking at them. But if you're looking at like a $10 million company and a $10 billion company, I think that's a huge difference. But at least according to the Sage Seeds AI, I'm not noticing that small caps or large caps are more likely to be undervalued. So with the Sage Seeds AI that I look at every day, I'm actually going to put this in the B tier. At the top of B tier though, yeah, I would have gone for A tier at the bottom, but because of what I see at every day, I don't actually notice much difference. I'm going to put it at the top of the B tier. All right. Chugging along, the Mag 7. Oof, this one hopefully is self-explanatory. These 7 companies, invest in them, forget about it. I would call that C tier. Not just because it's, it's just don't think about it just by these names, which is all kind of a bad place for my opinion to start as a value investor. I would recommend you don't just buy off of a brand name. But specifically, these companies have been rocking and rolling for years. They have the reputation because they're very expensive. Even small analyses of these companies would show you that, a Amazon is quite expensive, a Tesla is quite expensive, Apple has gotten quite expensive. At the same time, this includes companies like Meta, this includes companies like Microsoft, and those are good companies. They happen to still be good companies. The average quality of this group probably is really high. And so I think it's going to go into B tier for me. In order of deciding where the final place within B tier is, well, to be honest, let's just look at the performance. I mean, if you had invested in the Mag 7, you had a fantastic performance this year. You would have beaten the S&P 500, I'm pretty sure, with just the Mag 7. I'm not 100% sure, but I think that's right. Let's just not think about it too much. Put it right at the top of B tier. Okay, next we have Metaverse, the Metaverse narrative. Now, my understanding of the Metaverse narrative is that it's kind of a big deal. This is talking about replacing the phones in our pockets with handheld or other types of devices that are really yet to be invented. It really would be the sort of thing that pushes us beyond having smartphones. And all of that, all of the potential things going on in there are the metaverse narrative, in my opinion. I think the benefits of smartphones are really well understood. I mean, they've taken over the world literally. To try to improve upon smartphones already puts this in the upper half, in my opinion. If it can be done, there's real value there. And understanding who's doing it well is a fantastic place for a value investor to try to make a buck. And between A and S tier, I mean, I almost want to put this in S tier, but the truth is that there's probably a lot of dumb ideas in the metaverse still. And more importantly is I don't think there's been much in the way of successful metaverse stocks. I mean, the obvious example would be Meta had a great year, but Meta had a great year almost despite its metaverse investments, definitely not because of its metaverse investments. In fact, as I really think about this, I think this is Wild Westy. 2024, some people thought it was going to be the year for metaverse to actually blow up, to become accepted by the mainstream public. I think looking back, it really underwhelmed. The Consumer Electronics Symposium, really no one focused on it. I think Tesla blew everyone away with their autonomous vehicles, and there was really no room in people's minds to also look at all the cool metaverse stuff going on. I know I just said it might have even been S tier, but the more I talk about it, I'm convincing myself to put it in the B tier. And within the B tier, looking at how much money you would have actually made, I think metaverse actually stays at the end of the B tier, right at the bottom of it. Okay, next is a big one for sure, the AI stock boom. Now, does everyone remember how big a deal this was at the end of 2023? 2023 was an insane year for AI. We now know that 2024 turned out to be an insane year for AI as well. Within the sector, there's all sorts of, probably sketchy would be the word, things going on. There's all sorts of less than reputable activity going on in the AI sector. But that itself can be a symptom of real value, of real success. People don't get away with some of the more outrageous things if they're not using a really legitimate cover. So I'm actually quite bullish on AI stocks. More importantly, I think having this mentality as a value investor continues to be a way to outperform. Many value investors are benefiting off of this. The likes of Google, the likes of Salesforce, Palantir has been a darling in this space as well. Really kind of wrapping your mind about what's going on with software companies, what AI means in the day-to-day of people's lives. Really, really good way to think about stocks right now. And in 2024, I think it would have at minimum put you in the A tier. Would it have gone to the S tier? I'm not sure I can put it in the S tier myself, but I am going to put it right at the top of A tier for sure. It's significantly high. It's just barely an S tier, but I'm going to leave it in A tier for the reason that there is some quite sketchy stuff going on there that you got to be careful about. It is a little dangerous to be a value investor in the AI space, just a little bit. Yes, I forgot about this. The Europe recession. At the end of 2023, I think pretty much everyone thought Europe was going to a full-on recession, a full-blown recession. Instead, they've had like a mini sort of recession. Is that a D tier? I mean, honestly, yeah, it's a D tier because even if the recession had materialized, I'm not sure that would have been a good way to try to make money. Like you could, of course, you'd kind of have a bias towards shorting as a value investor, but most value investors dislike shorting for practical reasons anyway. And even if you do make some good shorts, like it doesn't really help you decide what to short to just say there's a general recession. I think this might be our first D tier. I mean, throw this away. Yeah, throw that away. If you thought Europe was going to have a recession, you probably wasted 2024, to be honest. That was a bit of a terrible way to look at things this last year. Sorry if that was you. US stocks. Now, like a lot of these other things, when it says US stocks, in my mind, I'm thinking it's deciding whether to invest in US stocks versus non-US stocks. It's actually not as easy as you would think because a lot of these US companies, take Facebook, for example. Facebook has the most used app in Latin America, WhatsApp. Buying a company like Facebook is really internationally diversified if you actually kind of break it down. And that's just one example. There's tons of US companies that are very internationally diversified. And so this is talking about the stocks, the listing of where the stock is. Do you buy in the New York Stock Exchange or are you going to London or Singapore, some other place, Hong Kong? And to be honest, with the Chinese in a full-on recession for most of 2024, which I think was pretty straightforward. I mean, they basically said we're going into a recession. They're pretty clear about it when they do it. And so if you were approaching this like, should I invest in US companies or non-US companies? It was probably a better than average year in 2024 to be having that mentality. You probably could have easily sidestepped most of the Asian markets and chosen US stocks instead of Asian markets. That would have been a pretty easy win, and it would have had an impactful win as well. I think it would have been certainly more impactful than the value versus growth question, but probably not as much as the AI stock. Like I said, AI stock was just almost an S tier. Maybe I should even put in there now, but no, I'll leave it in A. So US stocks versus non-US stocks, not always a great thing, but in 2024, I think you were definitely chilling with that type of mindset. Okay, last one here is the India boom. Now, for those that don't remember, 2022, India had an amazing, out of nowhere almost, India had, like the Indian stock market went gangbusters. And so at the end of 2023, and 2023 was not a good year for India, but at the end of 2023, a lot of people were thinking, oh, is India going to go into a full-on boom again? And India tends to be a lot more volatile than other stock markets, like substantially more volatile than other stock markets. I mean, there's a ton of options trading going on in India, for example. And so betting on India having a crazy year, an India boom, I think fundamentally is predicated on you hoping that a lot of people will be kind of playing the Indian options market, which is really where a lot of that upside tends to come from when it does happen. I'm not a big fan. As a value investor, I don't think trying to profit off of other people's options activity is a solid, repeatable way to do things. I don't think you can value that really. So that makes me want to put it down here in the trash bucket, C or D. It's not that India won't have a boom. I'm actually saying that like whether India has a boom or not, I don't think you should benefit from it by thinking about it that way. I think you should invest in Indian stocks if there are any of these other things, or if you have another idea of why you should be investing. But to actually make your focus be, if India has another big trending market, I'm going to benefit off of that. That's what this means to me. Yeah, I think it's going to go into D tier. Not as bad as the European recession. I mean, you were just completely had no idea what to do if that was your mentality. But if the Indian boom, at least you could have held cash for a lot of the year. But okay, 12 narratives for 2024. All of these were definitely being talked about at the end of 2023. I saw them in my notes. And I think now seeing how 2024 played out, I think this is a pretty accurate representation. Really, if you did anything like trading the elections or looking at metaverse stocks, you probably are a little bit unhappy, but you didn't have a bad year. you had a meh year. It happened to be a really good year for the indices, so you're probably feeling a little bit bad if you're in this B tier. But at the upper end of the B tier, you probably were just around what the indices were doing, which was a great year for indices. And then if you were kind of up here, you were specializing in Japan. You were looking at US stocks, trying to pick value out of just US stocks or AI boom stocks. I think these were definitely a lot of the more common paths that value investors could have taken to outperform even a great year for indices. I think you could have still squeezed some excess returns. You could have squeezed some excess returns with some of these strategies at the top of the list. Conversely, at the bottom of the list, I think you had crypto markets have insane years, really, really high performing years. But I think the average investor in the crypto markets didn't hold Bitcoin the whole year. Would have been really, really tough to just hold Bitcoin the whole year. If you invested in anything that wasn't Bitcoin, you're not feeling very good right now, to be honest, generally speaking. And same with healthcare stocks. I mean, if you specialize in healthcare stocks, yeah, it's a tough time. It's going to be a slog until a lot of the pandemic funding hangover kind of works its way out of the system. And if you're just investing based on continents or subcontinents, I'm not sure what you're doing day to day. Like these were popular at the end of 2023, but I hope anyone that started the year of 2024 with this mindset, hopefully they very quickly put that aside, threw it in the trash. I mean, what are you going to do if all of Europe goes into a recession? I mean, you could be right, you could be wrong, but what are you actually going to do? I don't know. So that's in the trash for me. That's in the D tier for sure. Well, this was actually surprisingly more fun than I even expected. I hope people enjoyed it as well. They recognize some of these narratives. You kind of, it was fun to look at the notes and remember what people were talking about a year ago. That's kind of the point of this New Year's time period in a lot of ways, is to reminisce about how far we've come. Yeah, definitely some of these narratives aren't even going to be in the 2025 predictions. I am going to make a similar video as this one. Please let me know if you think that's a good idea in the comments below. But I am going to make it predicting the stock market narratives that might be the most useful for value investors in 2025. Looking ahead, that is a little risky to make a forward prediction, so it's all going to be casual and in good fun. But yeah, some of this, I don't think the European recession narrative is really going to make is going to be in part of that next video. It's just not a good narrative. But some of these upper ones might also be in the 2025 prediction. The end of the year is a bit of an arbitrary cutoff, so these markets could continue to be trending according to these narratives. Please check out the next prediction video if you like this one, because I'm going to prepare. I'm going to look into it, try to come up with what the Seichi's AI is saying, what other reputable resources are saying, try to make that video accurate, still casual. I'm not going to promise anything, but I'm going to make it well researched. I could be completely wrong on every prediction, but at least it'll be well researched. All right, thanks HCs for watching. Have a great New Year's with your family, with your friends, with whoever you have. I'll see you in the next year.